The broadcast is now starting. All attendees are in listen-only mode.
Assalamu alaikum. Hello and welcome everyone to the P7 accounting webinar being organized for June 2018 examination. I am Kashif Kamran, your tutor for this session. Now the agenda of this P7 accounting webinar is to understand the importance of accounting standards in P7 in a 100 marks paper and how critical that can be in your success and failure towards the P7 exams. Now, in the session today, which is spread over the next 3 hours, we'll try to understand accounting treatments from different angles and from different aspects which are utilized in the P7 paper. And by the end of the session, hopefully, you will have a remarkable difference starting from now towards the end of the session. Now, first of all, I need to make a clarification. This webinar you are conducting is split into two parts. Today you are in a webinar for which the presenter is myself, Kashif Kamran. There is another part of this webinar where the presenter would be Hussain Qazi. My session is being held today. Hussain Qazi's session is on Friday from 9:30 a.m. to 12:30 p.m. the Pakistan Standard Time. Now, obviously, if anyone miss on the webinar due to any time conflicts, then obviously the recording of the lecture will be shared with all participants of the webinar, whether they have attended the webinar or they have not. Now, my agenda of the webinar today is to cover the P7 aspect of the accounting treatments, where I need to demonstrate how much you should be writing and how you should be writing. Whereas the session to be conducted by Hussain Qazi will cover summaries of the key accounting concepts, summaries of IFRS 9, summaries of IFRS 16, the summaries of the group accounting standards, IAS 12 and IAS 19. He will not be linking things to P7, rather he will just be making you realize the accounting treatments. IFRS 9, IFRS 16, the group accounting standards, the IAS 12 and IAS 19, and he will give you a summary which is in the context of a P7 paper. Now let's start with my part of the agenda, which is to understand the scope of the accounting treatments when it comes to a P7 paper. Now in context of a P7 paper, when we look at the accounting treatments is a very critical part of a question on risk, a question on evidence, and a question on reporting. These are three important questions within which you will find the accounting treatments and where you have to be good on accounting treatments. If I first look at the area of risk, within the risk, the audit risk technique and the risk of material misstatement techniques are the two techniques which needs an emphasis of an accounting treatment. So when a question comes on an audit risk, you will find accounting treatments within the case study. When a question comes on a risk of material misstatement, you will find accounting treatments within the case study. So to attempt these two questions, you should know how much and how to write accounting treatments and how to relate accounting treatments with the audit risk and the risk of material misstatement. Further than risk, when a question comes on evidence, particularly in a question on evidence which asks for comment on the matters and explain the audit evidence, you should expect to find during your review of the working paper. Now, in a question like such, when the examiner asks you comment on the matters, and explain the evidence you should expect to find during your review of the working paper. Then in terms of comment on the matters, see the breakdown. The comment on the matter means that you have to comment on the materiality. Then you have to comment on the accounting treatment. So that means in a question on evidence, when an examiner asks you to comment on the matters, you have to comment on the accounting treatment, also comment on the materiality, and also comment on the risk of material misstatement. So in a question on evidence, when the examiner asks you comment on the matters, you need to comment on the accounting treatment. And if the accounting treatment is wrong, then you have to comment on its risk of material misstatement. Then when you look at the question on reporting, in a question on reporting, there is a requirement which asks for comment on the matters. Now, if the examiner asks you comment on the matters in a question number 5, because reporting is a static question 5 of the P7 paper. So in a question 5, when the examiner asks you comment on the matters, then again the comment is on the materiality, the comment is on the treatment, the comment is on the treatment. And because the question is on report, so if you think the treatment is wrong, then you have to comment on the impact on report. So in a question on evidence and in a question on reporting, the only difference between comment on the matters is that in a question on evidence, we comment on the risk, whereas in the question on reporting, we comment on the impact on report. But in both cases, materiality and treatment is a common parameter. More importantly, when the question in P7 asks for implication for the audit report, implication for the audit report, or impact on audit report, implication or impact on the audit report, then in terms of writing the impact of the audit report, you need to define the issue. It's quite possible the issue is a wrong accounting treatment, for which basis you are issuing a qualified or an adverse opinion. So one of the reason why you can issue a qualified opinion is a wrong accounting treatment. So the issue here itself could be an accounting treatment, and then you have to justify what is the materiality of the accounting treatment, and then what is the opinion. So in a question on reporting, when the examiner asks you comment on the matters, you have to be particular about the treatment. And when the question asks for impact on report, then in terms of an impact, when you are writing the issue itself can be an accounting treatment. And if you think the accounting treatment is wrong, then you have to identify the materiality of the accounting treatment. And then you have to judge whether you will issue a qualified opinion or an adverse opinion. Now, these are three instances in a P7 paper where you need the accounting standards. So let's do a recap. You need accounting standards when you're attempting a question on audit risk. You need accounting standards when you are attempting a question on risk of material misstatement. You need accounting standards when you are attempting a question on evidence, which asks for comment on the matters. And you need accounting standards in a question on reporting when the question asks for comment on the matters or the question asks for impact on the report. So that is a very closed boundary or a very closed radius of thinking about accounting standards in the context of the P7 paper. Now let's start preparing yourself for how to handle accounting treatments in the context of P7. Now, first of all, before I start an exercise with you or a drill with you where I need to demonstrate how much to write and how to write, because just before the start of the session, I was conducting a poll in which almost 60% of the participants voted for. The result of the poll was very interesting. 43% participants told that they struggle with not properly writing the treatment. So they struggle with not properly writing the treatment. And another 43% participants told they struggle with how much to write. None of the participants told that they are weak in picking the treatment. Everyone was agree that they pick the treatment, but they struggle to write it. And everyone agree that they pick the treatment, but they struggle with how much to write. So I'll be focusing on how much to write and how to write because that is the basic agenda of the webinar today. But before coming to that basic agenda, let's do one very important exercise. Now, this is a Word file which I will be using across my 3-hour webinar today. And this Word file will be shared with all the participants who are registered for the webinar on the WhatsApp group. So you can take snapshots of this Word file, you can concentrate on this Word file, because ultimately this Word file will be with you over the WhatsApp group. So it's up to you how you want to be with this Word file, whether you take snapshots or you wait for it to be uploaded on the WhatsApp. Okay, let's start an exercise. First of all, when we speak of accounting treatments in P7, we need to look into the summaries of accounting standards, right? When you are preparing for P7, it is very good for the students who have appeared for P2 exams in the last 6 months, because those of you who have appeared for a P2 exams in the last 6 months, technically your accounting standards are very fresh. That means you are very well prepared for handling a P7 paper. Secondly, those of you who are appearing for P2 exams as well as the P7 exams in the June 18 exams, again, you are ideally prepared for your P7 exams because your accounting standards are up to date and fresh. Thirdly, those of you who have given the P2 exams in the last 1 year, in the last 1.5 years, and beyond that, then you need to revise your accounting standards. What are sources? What are sources from which you can revise the accounting standards? Number one, when you think about the sources to revise the accounting standards, the sources cannot be the P2 register. The sources cannot be the P2 textbook, because that is a lot. Because we need to revise the summaries, right? We do not need the depth of the P2. We just need a summaries, or we just need an crux, or we just need an overview. Now, how much overview is needed? Wait for 5 minutes. I'll guide you on how much overview is needed. But you should be looking at the summaries rather than you going down into a P2 textbook. Now, one of the better source of revising these accounting treatments is there is a website known as IFRS Box. You can visit the IFRS Box. They have very good illustrations on the summaries of accounting standards, which could be very, very good in revising your accounting treatments. They have created the mind maps of accounting standards, and they're very illustrative mind maps of accounting standards, which really help you visualize the accounting standard. I believe reading an accounting standard in a narrative form is very difficult, and reading it in like a mind map is very easier. So you can go down to the IFRS Box and you can see how good resources they have pertaining to your accounting standards. Then secondly, you should be having my summaries, the summaries which I have shared with you. Thirdly, if you're following the P7 textbook, if you're following any P7 textbook, whether it is a Kaplan textbook or whether it is a BPP textbook, both the books contains a chapter designated chapter on accounting treatments. So you can, if you have the textbooks, you can go into the textbook, and from the index page you can get to know which is the designated chapter on accounting treatments, or which is a designated chapter on accounting issues. You can go into that chapter and read that chapter thoroughly. Itself would be good enough for you preparing your accounting treatments. Now, apart from this, number two is what's the scope? What's the scope of the accounting treatments? What you should be knowing about accounting treatments. to what extent you should be knowing about accounting treatments. Let's do an illustration on that, which will help you understand the scope. I'm not covering all of them, but I cover majority of them just to give you an idea that when you are looking at a summary, basically what you are looking for in a summary. First of all, the scope of the accounting standard is to know about the recognition criteria, how something is recognized. So from every accounting standard, you should know how to recognize something, what is the recognition criteria, and also you should know about their disclosures. What disclosures are needed? What disclosures are needed? Not all disclosures, even if you know one and two disclosures from the relevant accounting standards, you are well prepared. It's not like you learn the list of the disclosures, that's a waste of time. But even if you know like a one and two disclosures needed, it's fine for P7. Okay, now let's go by one into some of the accounting standards. Okay, number one, if I start from like events after the balance sheet date, then as a student, you should be knowing about how to recognize an adjusting event and how to recognize a non-adjusting event. That is it. So you should know how to recognize an adjusting event. Obviously, it is to be adjusted in the financial statement, and how to recognize a non-adjusting event. It should be disclosed in the notes to the financial statement. So as simple as that. This is events after the balance sheet date. You should not be knowing anything after that. Then more importantly, if you think about the deferred tax, then in terms of the deferred tax, you should know about how, when to recognize a deferred tax liability. When to recognize deferred tax liability? What are conditions? In what conditions the deferred tax liability is recognized? And when to recognize a deferred tax asset? In what conditions? Right? For example, the company can carry forward the unutilized tax losses, and the company can recognize a deferred tax asset for the unutilized tax losses. So in an exam paper, if there are unutilized tax losses and you think there is no deferred tax asset, then you can criticize that there is a need for a deferred tax asset because of the unutilized tax losses. And the end, another example is a deferred tax liability. If the company have carried out a revaluation of assets, now because of the revaluation of assets, the company should recognize a deferred tax liability, because when the company performs a revaluation of assets, there is a taxable temporary difference, and because of the taxable temporary difference, the company should recognize a deferred tax liability. And please, for the context of B7, revaluation and revaluation giving rise to deferred tax liability is very common. So please be assured of that. And for B7, the unutilized tax losses is very common for recognizing giving rise to deferred tax asset. So at least you should know the two conditions is very common, because if you see the past paper for deferred tax liability and for deferred tax asset, these are the two most common equations. Then moving from here, you should know about the revaluation itself. And for revaluation, you should know that revaluation is done of the entire. How to recognize a revaluation surplus. How to recognize a revaluation surplus. Obviously, the gain on revaluation, right? The gain on revaluation. How should you treat the gain on revaluation? So you should know how you should treat the gain on revaluation. And you should also know how you should be looking at the revaluation surplus in the context of the statement of financial position. So how would you deal with the revaluation surplus in the statement of financial position? Obviously, it has to be shown as a part of your equity. So how would you show the revaluation surplus in the statement of financial position? How to present it? How to present the revaluation surplus in the statement of financial position? And how to show the gain on revaluation in the statement of comprehensive income? How to present it? That is maximum you should know about the revaluation from P7 point of view. You should know the balance sheet effect of revaluation and the income statement effect of revaluation. Then moving further from here, about the government grants, you should know how to recognize government grants, how to recognize the government grants in the financial statements. You should also know one of a very common parameter is how to recognize the government grants in the financial statement. And one of the best recognition one of the best recognition is to treat it as a deferred income. So you should know that the one of the best way to recognize the government grant is to treat it as a deferred income rather than deducting it from a cost of asset. So you treat it as a deferred income over the span of the grant, over the span of the grant. So you should treat the grant as a deferred income over the span of the grant. Then from foreign exchange transactions, foreign currency transactions, you should know how to record the initial transaction. How to record the initial transaction. This has been very common phenomenon of P7 exams. How to record the initial transactions using the spot rate. And how to retranslate how to retranslate the closing balances at the year end using the closing rate. So these are very common phenomena as A, B, C, D, E in P7 exams. Then moving further from this, you should also be knowing in terms of the borrowing cost, when to capitalize the borrowing cost, when to capitalize the borrowing cost. You should know when to capitalize the borrowing cost. Particularly, you should know about the qualifying asset. When the loan is specifically taken for an asset, you should know the qualifying asset, which takes substantially a long period of time to get ready. So you should know what is a qualifying asset and when to capitalize the borrowing cost. So you should know the capitalization of borrowing cost when it has been specifically taken for a qualifying asset. Then in terms of the related party transactions, related party, you should know how to give a disclosure of the related party, because this is a standard which is prone to disclosures. there is no recognition of a related party, right? It is just to give a disclosure of the related party. So how to give a disclosure of a related party, right? So how to give a disclosure of a related party. These all the equations I'm writing are common equations in P7. So you should be revising them. Then moving ahead of this, earning per share. You should know how earning per share is calculated. You should know that it is calculated on the basis of profit after tax. So if in a question you see that the earning per share is calculated on profit before tax, you will identify the problem. Or it is calculated on an adjusted profit, you will identify the problem. So you should know how earning per share is calculated on the basis of profit after tax. So you should know the formula. You should know the formula of the earning per share to be good in P7. Then ahead of that, you should know about impairment. Now, impairment is the most important sentence. The P7 examiner says it is difficult. It is difficult to find an exam sitting without impairment. It is difficult to find an exam sitting without impairment. Now, how would you be going about impairment? You should know the indicators of impairment. Which which assets are subject to impairment? Which assets are subject to impairments? You should also know when to recognize impairment. When to recognize impairment. You should know when the carrying amount exceeds its recoverable amount. And you should also know that the recoverable amount is the higher of fair value less cost to sell, and the recoverable amount is the higher of the fair value less cost to sell, or the value in use. So you should know when to recognize impairment on which assets. Even when we think about which assets are subject to impairment, the goodwill is very important to P7 paper, right? It is such a common parameter in P7 exams. We know goodwill should be subject to impairment once every year. Even the intangible assets, even the intangible assets is so common in P7 paper. The intangible assets which have an infinite life should be subject to impairments once every year. You should know the indicators for impairment. You should know the internal indicators of impairment. You should know the external indicators for impairment. And you should know that the impairment is to be recognized when the carrying amount exceeds the recoverable amount, and the recoverable amount is the higher of the fair value or the value in use. That is maximum you need for impairment. But please remember, impairment is a key standard in P7. So let me emphasize that with yellow. Now, one of a better way you can prepare yourself for impairment. Okay, one of the better way to prepare yourself for, there is an examiner article. I can copy this link and paste on a Word file. There is an examiner article which is exam technique for advanced audit and assurance about accounting issues. And in the accounting issue article, the examiner has spoke about impairment a lot. And within this, he says it is difficult to find an exam sitting without impairment. So, examiner has covered the impairment in depth. So, please read this examiner article. I'm pasting the link. This is the link of the article, right? Which you should be reading. So, please ensure that you read this link for impairment. So, you are good on this. Right, so I've copy pasted the link for you. You have to read this link. Okay, then next, provisions. Provisions and contingent liabilities. For provision and contingent liability, for provision and contingent liability, you should be knowing what are, when to recognize a provision. When to recognize a provision. You should know when to recognize a contingent liability. And you should also know that the contingent liabilities should be disclosed. Contingent liabilities should be disclosed in notes to financial statements. And you should also know that the provision is recognized as a current liability. But you should know when to recognize the provision, right? I hope all of you know when provision is recognized, when there is a probable outflow, and when to recognize a contingent liability, when there is a possible outflow. See, this is the way of preparing accounting standards in P7. Just keep it to minimal. Just keep it to minimal. So I'm trying to make a structure of minimal in front of you. Then moving from that, again, this is a very important standard. Let me highlight this with yellow. These are three most important standards in P7, without which a P7 paper cannot be made. IS 36, 37, 38, right? So IS 37 is another very, very important standard. You will see that so many times in P7. Then another very important standard without which you cannot see the P7 paper is the intangibles. The intangibles is such a common parameter in P7. You cannot see an attempt, you cannot see an attempt without IS 38. You cannot see an attempt without IS 38, and that is the reason the examiner wrote in the article. See this article, the one I was showing you, in the example 1, the examiner is covering the impairment, and in the example 2, in the example 2, the examiner is covering the intangible. So if you read this article, you would be so good on impairment and intangible. You will be so good on both of them. So please do read this examiner article here. Again, I've pasted the link. So for intangibles, you have to read the examiner article again. But what you should be knowing about intangibles, first of all, you should know about when to recognize intangible assets. When the cost can be reliably measured, or when you expect the future economic benefits to flow to the organization, when to recognize an intangible asset. Then you should also be concerned about the amortization of the intangible assets. The amortization of the intangible assets. You should also be knowing about impairment of intangible assets. Then something very important is that you should know that in P7, when it comes to intangible assets, some very common P7 intangibles, without which you cannot see the P7 paper, is the development cost. is the patents, license, license, and goodwill. These are so common in piece and paper. You should know the criteria to capitalize a development cost. Criteria to capitalize a development cost. Criteria to capitalize a development cost. And you should know the amortizations of the intangible assets, particularly the intangible assets which have a finite life, particularly the impairment of the intangible assets which has infinite life. You should also know that goodwill should be subject to an impairment review once every year. So examiner has written an article. Please do read this article. It would be so good for your revision of P7, at least for intangibles and at least for impairments. So impairments and intangibles, you cannot have any excuse on that. So you can be good on these areas by revising it from the examiner article. Rest you can revise from the IFRS box. The IFRS box is a good summary of these areas, all these areas. So this is another very, very important area in P7, right? Intangibles. Three very important standards. IJK. IS 36, IS 37, IS 38. Okay, then rest. You should know about investment properties. You should know about what are investment properties. Again, the IFRS box will guide you so perfectly here. What are investment properties? You should know the examples and how to recognize investment properties. How to recognize investment properties. I think once or twice, I think once the question has come on investment property in one of the risk question. So it's not very common phenomena, but it's something which comes once in a blue moon. Then from there, you should know about the share-based payments. Share-based payments is very common in P7, so let me emphasize that in yellow. Share-based payments. Uh, in terms of the share-based payment, you should know how to recognize uh, equity settled, how to recognize an equity settled share based payment plan, and how to recognize a cash settled share based payment plan. So how to recognize a cash settled and an equity settled share based payment plan. See, there is another resource. Okay, if I can help you with some of these areas, so it can save your time. I cannot help you in all, but in some areas where I have anything instant, I can help you out with that. Uh, for example, if you think about equity settled and share settled plan, this is the best possible summary. How to recognize a share based payment plan, just written over here. This is how you go about equity settled, and this is how you go about cash settled. So you can read after the end of the session, right? This is how you go down with equity settle and cash settle. I've given the treatments as much you need for P7 paper, right? Then you should know about for the share-based payments, you should also know about the vesting conditions. Okay, just 1 minute. Okay, you should know about the vesting conditions as well for share-based payment. The vesting conditions, uh, particularly, you should know about market conditions are ignored in recognizing expense. So if the P7 examiner always bring you in this confusion in P7 paper, he says he will say that the management has not recognized an expense on the basis of the market conditions. So we have to be very clear that market conditions are ignored in recognizing the expense, whereas the performance conditions or the service conditions are taken into account in recognizing expense each year. So this is very common phenomenon in P7, that every time the examiner would say because of the market condition the management has not recognized an expense. So you should know that market conditions are to be ignored. It is the performance conditions which are to be taken in recognizing the accounting, uh, in recognizing expense each year. So that is maximum you should know about the share-based payment. And I've tried putting a summary here wherever possible. Okay, I hope this exercise so far is helping you, making your understanding clear. Is this exercise helping you to know the boundaries in which you have to prepare yourself? Okay, then next, you should know about the asset held for sale, which is very common. Asset held for sale. The group standards will be covered by Sir Hussain Kazi, right? So I'm skipping them in between. You should know about asset held for sales. You should know about how to recognize an asset held for sale. How to recognize an asset held for sale. How it should be recorded, and how it is presented in the statement of financial position, how it is recorded and how it is presented in the statement of financial position as a current asset. So you should know about asset held for sale, how to recognize an asset held for sale. And then more importantly, you should also know how to recognize an discontinued operation, or rather how to recognize a discontinued operation in the financial statements, or rather how to present it, how to present the discontinued operation. Okay, then towards some of the last standards, you should know about the financial assets and the financial liabilities. The IFRS 7 and 9, you should know about uh, how to recognize financial assets, how to recognize financial assets, should be recognized through at fair value through P&L, and how to recognize financial liabilities, how to recognize financial liabilities. And you should also know about the disclosures from IFRS 7, how to recognize the financial asset, right, from the IFRS 9, and how to recognize the financial liability from IFRS 9. Then you should also know about revenue recognition. You should know about when to recognize revenue, when to recognize revenue. In the past paper, this has been a very common statement. Since the new IFRS 15 has come in, examiner has focused a lot on the revenue recognition. So let me mark this as a very important standard for P7, revenue recognition, as very important. And You should know about when to recognize revenue. You should know about the performance obligation, when control is passed, or when performance obligations are met, when performance obligation are met. It is very common in P7 that the examiner involve revenue recognition in most of the cases, so you have to be clear on that as well. Okay, then obviously about the leases, which will be covered by Hussein Kazi, you should be knowing about how to recognize leases in financial statements, uh, how to treat a lease which is under 1 year, because I hope all of you know that since the introduction of the new IFRS 16, uh, all leases are to be recognized as finance lease. All leases have to be recognized as a finance lease, right? Since the introduction of IFRS 16, with the exception of a lease under 1 year. If the lease is under 1 year, then you can expense out. Um, Rather, other than that, you have to recognize all the leases on your balance sheet. So there are no every lease will now be recognized as part of your non-current assets. So Sir Hussain Kazi will emphasize on leases IFRS 16 more in the session on Friday. Okay, now though Sir Hussain Kazi will be covering the group accounting standard part, but if I want to give you an understanding quickly of the group accounting standards, what you should be knowing about group accounting in P7. In P7 paper, the maximum you should know about group accounting is this. You should know about how to recognize an associate in the financial statements. How you recognize an associate in the SOCI, and how you recognize an associate in an SOFB. How you present the associate in an SOFB, and how you present the SOCI in how you present the associate in the SOCI. Then you should also know how to recognize a joint venture in financial statements. Then you should also know how to recognize the the non-controlling interest in the SOCI and in the SOFB. How to treat the intercompany transactions, how to treat the intercompany transactions in group financial statements. Obviously, it's simple that you should thinking about elimination of the intercompany transactions. All intercompany transactions should be eliminated. You should also know about how to yes, that is maximum. You should know associates, you should know joint ventures, you should know non-controlling interest, and you should know intercompany transactions. So that's all under the group. The group and IFRS 16 will be covered by Hussain Kazi, right? And even IFRS 9 and IS 12. Okay, so has this structure made your life a bit easier? Do you know exactly under each standard what you should be focusing on? Will that help you to revise them within a minimalistic time? Even if you're revising the summaries, do you know what is your scope now? Is everyone clear with the scope of every accounting standard in P7? Can I get a yes and no? Okay, so I'll share this with you after the end of the session, right? But this file will help you understand how you should be going about accounting standards in the paper. Now, one very important thing, we are starting off with the exercise now. The reference to an accounting standard, the reference to an accounting standard, and the name of the accounting standard. Right? This is a frequently asked question in which the student asks, should we refer to the name and reference number of the accounting standard? Right? The answer is no. And I have been very explicit on that since I started teaching P7 paper, that the examiner gives you no marks. There are no marks. There are no marks for the reference and for the name of the accounting standard. So I have been very clear on that since I started teaching the P7 paper. And normally the student used to be very confused. Then why the examiner puts the references in the answer? And I used to tell student that the examiner answer is a tutorial guidance. You cannot match the length of the examiner answer. You cannot do everything which the examiner has done in the answer, because the examiner answer is a tutorial guidance. If I want to study something, I will study that from the examiner answer, because the examiner answer is giving me a guidance on the subject, not just what should be written in 3 hours. So examiner will give me the whole understanding about an asset held for sale, not just keeping it confined to what I should be doing in 3 hours. So if even if a student wants to revise the accounting standards, the student can revise the accounting standards from the examiner answer. They itself are a good source of revising the accounting standards itself. So you can even prefer the examiner answers for revising the summaries, but you cannot write all what the examiner writes because they are tutorial guidance, and you cannot give references to accounting standard and the name of the accounting standard reference. And the examiner has made it clear for the first time by the publishing of this article, the article which I have been referring in the session today, accounting issues. See, the examiner refers it very clearly here. No credit, no credit is awarded for the name or number of the auditing and the financial reporting standard. So no credit is awarded for the name and number of the financial reporting standard. I hope you will be clear after this. And this article is written by the P7 examining team. So P7 examining team has written this article telling you there is no marks for the name and number of the accounting standard. So I hope now you can come out of the illusion why the examiner do so. Examiner do so because that is a tutorial guidance, and the examiner wants to guide you, facilitate you. Even if someone does not know an accounting standard, you can read the examiner answer and get to know about it. So examiner answer is not a 3-hour answer, it is a guidance. It is a guidance on the subject, complete guidance on the subject. I hope that's clear, right? So this is a very frequently asked question from student. So I thought let's make it clear as well in the accounting webinar that there is no marks for the reference and the name of the accounting standard. Now, something I'm starting now is how much to write. How much to write? First of all, come out of the illusion, come out of the illusion that you have to write all what the examiner has written. So come out of that illusion, right? That you have to write all what the examiner has written. Secondly, there is 1 mark per accounting treatment. Per accounting treatment. You are writing in the exam paper. Per accounting treatment. You are writing in the exam paper. Now imagine how much should you write for 1 mark. Imagine how much you should write for 1 mark. There is no definition for that. How much you should write for 1 mark? How much means it should not be ambiguous. It should not be ambiguous. It should not be incomplete. Rather, it should be concise yet complete. So there is no 1 mark definition, but 1 mark can be like 3 to 4 lines, 3 to 4 lines, or can be 4 to 5 lines in a case. Depends upon which accounting standard you're dealing with. Some accounting standards can finish in like 3 to 4 lines. Some accounting standards take time, 4 to 5 lines, but not beyond this. 3 to 4, 4 to 5 means the average is like 4 to 5 lines. So how much to write? First of all, come out of the illusion that you have to write all what the examiner has written. 1 mark per accounting treatment. Imagine how much to write for 1 mark. It should not be ambiguous. You will not get 1 mark if it is ambiguous. If it is incomplete, you will get mark when it is complete yet concise. And please ensure that whatever you are writing is adaptive to case. Adaptive to case, rather rote learning. You cannot just rote learn an IAS and reproduce in the exam paper, but you cannot reproduce the rote learn accounting standard in exam paper. If you do so, then you're writing a lot. You cannot reproduce the rote learn accounting standard in exam hall, because if you're doing so, then you are writing a lot. Because I've seen a lot of time the student who goes with rote learning, they reproduce pages and pages on accounting treatments. You cannot have an accounting treatment going on a page. You just need to confine your accounting treatment to like 3 to 4 or 4 to 5 lines. So if you go with rote learning, there is a high chance you're writing a lot. So adaptive to case, right? Let me show you something from here. If I take you to the examiner article, sorry. If I just take you to the last paragraph of this examiner article, and again, I am encouraging that you have to read this, right? See the conclusion. Can you just read the conclusion yourself? Just read the conclusion and understand what the examiner is saying about how much accounting standards should be written. Particularly read the fourth, fifth, and sixth line very carefully. Fourth, fifth, and sixth line very carefully. See what is written in the fourth line. It says, as with most areas of advanced audit and assurance, it is the application of the accounting knowledge rather than the knowledge itself which will attract marks. It is the application of the accounting knowledge rather than the knowledge. A key word from examiner, right? It is the application of the accounting knowledge rather than the knowledge itself. So it is the application of the accounting knowledge, rather the knowledge itself. So it is the application of the accounting knowledge, right, rather than the knowledge itself, which gives you credit. So adaptive to the case, adaptive to the case. You have to do the application rather than just the rote learning. So this is how much to write, which is one of your favorite question. How much to write? So you got the marking scheme, you got to know how much to write. Now the one last thing left is the demonstration. If the, it will become more clear if I demonstrate that in front of you. I demonstrate what you should do and what you do. So I need to clarify you how much should we write and how much a student technically writes in an exam paper. So then only you will understand the message which I'm trying to communicate. Is everyone clear so far? Should we start on with the demonstration phase now? Is everyone clear in which topics will you see accounting treatments? Accounting treatment comes in 3 topics in P7, right? And then I've made this worksheet for you. This worksheet which covers each and every aspect of the accounting treatments which is needed for P7 exams. Okay. Now this worksheet was shared with you on the WhatsApp group, and the worksheet you can find it even in the documents in the handout section of the webinar. So you can see the handouts attached in front of your screens in the webinar panel, and you can see this accounting treatment worksheet. I'll be filling the accounting treatment worksheet, and again I'll share this with you at the end of the session. Now in P7, sometime when you're reading a case, the case says 4 new drugs are in research and development phase, full stop. It is not telling you anything. Now in such a case, you need to apply the rote learned knowledge. You need to apply the rote learned knowledge because the examiner is not telling you anything after the full stop. It says 4 new drugs are in research and development phase. So if I start writing this, I'll be writing it like this. The reference and the name of the accounting standard does not carry marks, right? The reference and the name of the accounting standard does not carry marks. So I'll start writing, saving my time in exam paper, saying research cost should be expensed out immediately once incurred, comma, whereas the development cost should be capitalized subject to relevant criteria. Now, don't start writing the whole criteria. It's a waste of time. That was exactly what the examiner was telling. It's the application of the knowledge rather than the knowledge. Whereas the development cost should be capitalized subject to a criteria. For example, the commercial viability. For example, the commercial viability and the technical feasibility of the product developed of the 4 new drugs, the commercial viability and the technical feasibility of the drugs. So whereas the development cost should be capitalized subject to a relevant criteria, for example, the commercial viability of the drugs you're developing and the technical feasibility of the drugs developed. The commercial viability and the technical feasibility of the drugs being developed. Full stop. So whereas the development cost should be capitalized subject to a relevant capitalized as an intangible asset as an intangible asset subject to a relevant criteria, full stop. See, I didn't refer to the name and number of the accounting standard. Now, because this question is on risk, this is December 14 question number one. So after the full stop, I have to say if the research, if the research cost is capitalized, because I have to write the question on risk now. So if I say if the research cost is capitalized, it could overstate the intangible assets. It could overstate the intangible assets and the profit. Full stop. See, I wrote the treatment and the risk without referring to the accounting standard because this was the question on risk, December 14, question number one. Then it says it is common in the industry for patents to be acquired. It is common in the industry for patents to be acquired. Now again, the examiner is not telling me anything. So I'll say, rather than referring to the accounting standard and wasting my time on it, I'll say patents, and I'll think in the exam paper, patents are intangible assets. So I'll say, okay, it is common in the industry for patents to be acquired. Patents should be recognized as an intangible asset at cost. Patents should be recognized as an intangible asset at cost and should be amortized should be amortized each year on the basis of their useful life. See, patents should be recognized as an intangible asset at cost and should be amortized each year on the basis of their useful life. Then the risk. If patents if patents are not amortized, if patents are not or amortized over an inappropriate useful life. They are not amortized or they are amortized over an inappropriate useful life. It could understate the operating expenses and overstate profit. Now see how much I wrote. My answer is complete yet concise. But see, you can write this way in exam paper. Those of you who are obsessed with accounting treatment. The red is the wrong, right? The red is the wrong. This is the wrong way, which the student takes. The student says, as per IAS 38, comma, intangible assets Okay, so a wrong way of writing is the student says, as per I-38, comma, the intangible assets, this they'll put another comma and they'll say intangible assets should be recognized when when the cost of the asset could be reliably measured and the future economic benefit will flow to the company. Full stop. There are two types of intangible assets, one with finite life and one with infinite life. The one with the one with finite life should be amortized, whereas the one with infinite life should be reviewed for impairment. Now, see, so far in all the four lines, you are writing the knowledge. Examiner was saying it is the application of the knowledge rather than the knowledge. Have you addressed patent so far? Have you written about patent so far? Have you told examiner patent should be recognized? You're just speaking generally about intangibles and their types of intangibles, full stop. After written all that, then you come down and realize all of a sudden in the exam hall, I was doing a question on patent. So I just wrote four lines, which is meaningless. And then I start realizing, okay, I have to read all this. Are there any marks for read? Examiner is saying you will get credit for the application of the knowledge. You will not get marks for knowledge. You will not get marks for knowledge. So have I wasted time writing all that I wrote in red? Because the marks were given to me for something written in the blue. I hope you're understanding that. The marks were given to me for something written in the blue. I just wasted my time writing all that in red. I hope you understand that. The marks are for what is written in blue. See how much you wrote in blue. And if I write the red and the blue, how many lines I wrote? 1, 2, 3, 4, 5, 6, 7 lines on a Word file. On a Word file, I wrote 7 lines. If I get 2 marks there, I will get 2 marks here as well. But have I wasted my time? If I get 2 marks by writing 3 sentences and I get 2 marks by writing 7 sentences, are you getting the sense what students do normally in exam paper? And if someone of you is repeating and is in my webinar, you can realize this. So is there any benefit of writing something in red? If I can get a quick answers from your side, is there any benefit of writing something in red? Is the examiner telling us the same? Was the examiner saying the same thing? That it's the knowledge, it's the application, not the knowledge. So red is the knowledge. So knowledge does not have any marks, right? Right. So the wrong way, let's cross it. Okay, that's one exercise, right? So I'll try criticizing you as much as possible. I hope that will not demotivate you, rather will motivate you. Okay, then the next equation, it says, in January 14, cannoli began to sell into a new market, that of animal health. This has been very successful, and the sales of these grooming products for livestock and pets amounts to approximately 15%. This has been very successful, and the sales are approximately 15% of the total revenue. Sales from what? Sales from animal health. And what is animal health? Animal health is a new market. And please remember, this company, Canoli was a listed company in this case. So, which means when a listed company enters a new market, there is a need to apply the IFRS 8 because animal health is a new market. So we need to give the results for each segments. So we should give the segmental results, operating segments. So again, see, I will write so concise here. I will say the animal the animal health market, which contributed 15% to the total. See, I am applying the case, I'm not writing the knowledge. The animal health market, which contributed 15% to the total sales of the company during the year, is a significant operating segment for cannoli. Thus, cannoli should give disclosures, should give disclosure of results of operating segments, disclosure of results of operating segments in the notes to financial statements. If disclosures are not given, the financial statements could be materially misstated. And a student starts to tell what is a major operating segment, and he starts to give a definition of an operating segment, and he tells a major operating segment is a one of which the sales or assets increase by 10% of the total assets, 10% of the total sales, 10% of the total profit. You're wasting your time if you're giving a definition of an operating segment and you're telling examiner what is an operating segment. When an operating segment becomes a major operating segment, you will waste so much time on that. I was very particular that the animal health market, which has contributed 15% of total sales, is a significant operating segment for cannoli. Thus, cannoli should give disclosure of results of operating segments in the notes to financial statement. If disclosures are not given, the financial statements could be materially misstated. So I hope you're understanding application of knowledge rather than knowledge. Is everyone clear on that? Application of knowledge rather than knowledge? Okay, another exercise. Another success in 2014 was the acquisition of a cold comfort brand from the rival company. The product to alleviate the symptoms of cough and cold are sold under this brand. The brand cost $5 million. Dollars. The brand cost $5 million. Dollars. Now, this is the first time I can see a value and is being amortized over an estimated useful life of 15 years. So the management has recorded the brand at a cost and they're amortizing it at 15 years. And the total assets of the company are 200 million. Now, for the first time across my four equations, I can see the value. There was no value for number one, number two, number three. Now, see the change of answer. The moment you see the value, it is very important for you that you start writing your answer with materiality. You will first tell examiner before the treatment, you will tell examiner first the materiality. See the change now. When you start writing the answer, you will say the brand cost, the cold comfort brand, the cold comfort brand recognized as intangible assets at $5 million is how much percentage is it? 5 divided by 200? 5 million divided by 200 million is how much of the percentage? Is okay, it's 2.5%, right? Okay, so the cold comfort brand recognized as an intangible asset at $5 million is 2.5% of the total assets, comma, thus material to the financial statements. See, you have to write this when there is a value. When there is a value, you have to write this. See, the value was not in the first three equations. So I directly started with a treatment. But when there is a value, before the treatment, I will write the materiality. So before the treatment, I will write the materiality. And after the materiality, I will write the treatment. After the full stop, now I will write the treatment. Application of the treatment, right? The acquired brand, that is cold comfort, should be recorded at cost as an intangible asset, and should then be amortized over its useful life. So you're just supporting the treatment given here is the right treatment. So you just supported the treatment. You wrote the acquired brand, that is the cold comfort brand, should be recorded at cost as an intangible asset and should then be amortized over this useful life, which was perfectly right. However, comma, the only risk associated with the cold comfort brand is its estimated useful life. If the useful life is wrongly estimated, we know anything which is estimated is risky, right? If the useful life is wrongly estimated, it could under or overstate the amortization expense and the profits. Full stop. See how much case oriented I wrote. I first found the materiality, then I say the acquired brand, and I mention the brand, the name of the brand should be recorded at cost as an intangible asset and should then be amortized over its useful life. That was just the support. That was just the support of something the management did. Then the only risk which the management could have done here is the only risk with the cold comfort brand is its estimated useful life. If the useful life is wrongly estimated, because anything which is estimated is a risk, it could under or overstate the amortization expense. And I start telling examiner the finite life, the infinite life, the impairment, the amortization, the intangibles, when to record them and not to record them. See, I'm wasting my time. So see, because there was a value, because there was a value given, so I started first with materiality, then I wrote the treatment, and in last I wrote the risk of material misstatement. And that is what I refer as, and all of you attending the webinar are familiar with my mnemonics, whether you are my regular class students or you are my crash students or you are my ACCA webinar students. All of you must be familiar with my mnemonic known as MTR. So see, have I wrote the MTR? Only when M is possible. In the above equations, patents, the operating segment, the M was not possible. So I didn't mention the M. So M will come only when possible. M will come only when possible. But because I'm solving a December 14 question number 1, which is on risk, so every time with the treatment, I have to write a risk. So with every treatment, I'm writing a risk, because this is a question number 1 of the B7 exams, where you have to write the treatment as well as the risk. Are you getting some sense of writing treatments? Okay, so you've done the December 14 paper, right? Now let's start with December 15 paper. Again, this statement from December 15 exams. Can you see a value in this statement? Can you see a value in the December 15 question number 1? Is there a value? Please, everyone, I need you to be responsive. Can you see a value in the first equation coming from December 15 exams? Is there a value given in December 15 question number 1 first statement? No. So will I start with materiality? Will I start with materiality? No. I will directly start with what? I will directly start with what? The treatment. And treatment followed by risk. Perfect. Okay, so let's write the treatment. Its customer base is located solely in the country of incorporation, but most of the components used in Dali manufacturing process are imported from foreign supplier. Imported from foreign suppliers. So that means I have to apply the IS 21. Imported from foreign suppliers. So which accounting standard should I apply? The IS 21. So I'll not refer the name because it does not have any marks. So I'll directly say the purchase of raw material, the purchase of raw material from foreign suppliers. See, I'm bringing it to the case. The purchase of raw material from foreign suppliers should initially be recorded at the spot rate, whereas any liabilities pertaining to the purchase of raw material at the year end should be retranslated using the closing rate. See, I wrote specific to the case. I say purchase of the raw material from the foreign supplier. See, specific should initially be recorded at spot rate, whereas any liabilities pertaining to the purchase of the raw material at the year end should be retranslated using the closing rate. If wrong exchange rates are used, it could under or overstate the purchases and the liabilities. and one of the student gets to the exam hall and see, as per IS 21 comma, the title of the IS 21 comma, there is a spot rate, there is a closing rate, there is an average rate. Then he tells examiner when average rate is to be used, when spot rate is to be used, when closing rate is to be used. See how much how much dragging have you done? And then you say, okay, I was concerned with import from foreign supplier. See my answer. Are you understanding the meaning of the word concise and complete? Are you understanding the meaning of the word application rather than knowledge? Okay, can you see again and again I am doing the application, not the knowledge? But does my statement contains the accounting treatment? Does my statement contains the accounting treatment? I hope you're getting some clarifications. We are halfway through the session. We are halfway through the session, right? So when we started the session and now in halfway through the session, how confident you are on, and how confident you are that you can write the treatments very well. So at the start of the session, what was your definition of a treatment? And halfway through the session, what is your definition of a treatment now? Okay, let's continue with the exercise. Okay, the next one. Where management consider the design work will be significant, the customer is required to pay a 30% payment in advance. So customer are required to pay 30% payment in advance, which is used to fund the design work. The remaining 70% of the payment is made on the delivery of the machine to customer. So 30% payment is in advance and 70% is on the delivery of the machine. Now this is December 15 question number 1, right, which is on risk. Now do I have a value? Is the examiner giving me a value here in this case? No. So will I start directly with the accounting treatment, the revenue recognition? So I will tell directly the treatment. So from the next line, I'll tell examiner my treatment. Number 1, the 30% payment in advance should be recognized as an unearned income or as a deferred income because the performance obligation will be met when the machine is delivered to the customer. The 30% payment in advance should be recognized as an earned income or a deferred income because performance obligation will be met when the machine is delivered to the customer, only when it could be recognized as income or only when it could be recognized as a revenue. The 70% is paid on the delivery of the machine. That is fine because that is where there is no risk. The risk is with the 30%. So remaining 70% is paid on the delivery of the machine is fine. But even if you want to write that, you can tell examiner the remaining 70% should be recognized as income immediately once received as control As control, 70% should be recognized as income immediately once received, because as control would pass on the delivery of machine. Thus, if if 30% advance payment is treated as income, it will overstate revenue. Full stop. See, did I use those specific jargon, 70%, 30% payment in advance? Did I made my answer look case specific? How can you ensure your answer looks to the case specific? See, I'm using the jargons of the case to make it case specific. I'm not saying as per IFRS 15 performance obligation, what is performance obligation, what are criteria of performance obligation. I'm wasting my time, right? Okay, another one. In March 15, a cash settled, not equity settled, a cash settled. A cash settled share-based payment plan was introduced to senior executives who will receive a bonus on 31st December 2017. So March 15, 15, 16, 17, after 3 years, bonus on 31st December 2017. The amount of the bonus will be based on the increase in daily share prices from that date at the date of flotation, when it was $2.90. So the fair value at the grant date was $2.90. And I should recognize the liability on a cash settled share based payment plan by taking into account the fair value not at the grant date but fair value at the year end. On the advice of the newly appointed finance director, no accounting entries have been made in respect of the plan. See, that means we have not recognized a liability, we have not recognized an expense, but the details relating to the cash settled share based payment plan will be disclosed in the notes. All of you know, right? IFRS 2 is not a disclosure standard, is a recognition standard. We should have made the accounting entries rather giving a disclosure. So should we recognize the liability and an expense by taking into account the fair value at the grant date? So I will start writing the treatment, right? Again, looking at the case rather than telling examiner everything about IFRS 2. I will say a liability and a related expense, liability and a related expense should be recognized each year up to 2017, should be recognized each year by taking each year in respect of the cash settled share based payment plan, by taking into account the fair value by taking into account the share prices at the year end. So I should recognize the liability and a related expense each year in respect of the cash settled share based payment plan. This is a plan for 3 years, right? By taking into account the fair value at the year end. Had it been an equity settled, then I would have taken the fair value at the grant date to recognize the expense and the equity. So a student wastes time. He say, as per IFRS 2, there is an equity settled plan, there is a cash settled plan. What is equity settled? What is cash settled? Blah blah blah. You're wasting your time. Till the time you realize I am writing an answer on cash settled. I'm not writing an answer on equity settled. So a liability should be recognized, taking into account the share prices at the year end, full stop. After that, you start writing. Now, the question is very clear, right? No accounting entries have been made. No accounting entries have been made. So we are very definite. Thus, at present, because no accounting entries are made, no accounting entries are made. We are not saying if, we are not saying if, thus at present, because no accounting entries are made, the expense and the liability, the expense and the liability is understated. We are very sure, we are very sure, because it says no accounting entry have been made. So we are not writing in a tone of if, because no accounting entries are made, thus expense and liabilities are understated and profit is overstated. See, again, I wrote case specific answer. Are you getting some sense? I'm just taking a break now for 10 minutes. The prayer breaks, and we'll resume by like 5 minutes short of the 6 o'clock. 5 minutes short of 6 at 5:55 p.m. Pakistan Standard Time. I'll resume back with more exercise on writing the accounting treatments. We still left with page 2 and page 3. So by the end of the page 3, I hope all of you will be clear about how much accounting treatment to write. I hope those of you who are repeating P7 and is in the webinar, you must have got an eye opener that how much you used to write and how much am I writing. But see, my writing is not ambiguous. My writing is to the point. Is everyone clear so far, so forth? Okay, so we're taking a break now, and within the break, you have a poll in front of your screen. So right, there is a poll in front of your screen which you will be participating in, and will meet in like 10 to 12 minutes from now at 5 minutes short of 6, right? Okay, welcome back from the break. Let's resume the exercise. Okay, the next one from the same exam sitting, December 15, question number 1. The finance director recommended that the company's manufacturing site should be revalued. So the director recommended, so that's a good thing, right? That the manufacturing site should be revalued. An external valuation was performed in June 15, resulting in a revaluation surplus of $3.5 million dollars being recognized in an equity. So can I see a value here, $3.5 million dollars being recognized in the equity? The finance director has informed the audit committee that no deferred tax needs to be provided. So the very good thing he did was the revaluation, and an external valuation was performed in June 15, which is very good. And because of that revaluation, a surplus was created. Now, as per the finance director, the only wrong thing he did in this case was that he said no deferred tax should be provided in respect of the valuation because the property is part of the continuing operation and there is no plan for disposal. So I'll start first with the materiality because there is a value given. So I will say the revaluation surplus the revaluation surplus of $3.5 million. Okay, thank you for finding the answer. 4%. The revaluation surplus of 3.5 million recognized in equity is 4% of the total assets, thus material to the financial statements. So I wrote the M. Now I have to get back to the treatment. Now, the problem is with the deferred tax. So I'm not emphasizing on the revaluation. It says no deferred tax needs to be provided. So I have to be case specific. I tell examiner everything about revaluation, but nothing about deferred tax. So after the full stop, I'll say the revaluation give rise to a taxable temporary difference due to the difference between the tax base of an asset, tax base of the manufacturing sites. Let make it more specific. Manufacturing sites, between the tax base of the manufacturing site and their carrying value. The revaluation gave rise to a taxable temporary differences due to the difference between the tax base of the manufacturing site and their carrying value, for which a deferred tax liability should be recognized. So see, I was case specific, should be recognized, but it says no deferred tax. So I'm very blunt now. I'm not saying if, should be recognized. However, as no deferred tax is provided, the deferred tax liability is understated. See, again, a very case specific answer. I was just focused on the revaluation giving rise to deferred tax liability. So I was linking the revaluation with the deferred tax. Purposely use the word manufacturing site. Purposely use the word manufacturing site. Purposely use the word the revaluation give rise to a taxable temporary difference. So I linked the revaluation with the deferred tax liability. And I purposely used the value $3.5 million. Okay, then further, June 16 exams. We're changing the exam paper, right? We are going to the June 16 exams now. We were in December 15. So June 16. In the June 16, it says several old warehouses were modernized during the year. The modernization involved the redesign of the layout of each warehouse. The modernization involved the redesign of the layout of the each warehouse. The installation the installation of the new computer system and the replacement of the electrical system. So there has been some modernization of the warehouses, right? Now, if you see the note number one, the note number one says in the statement of financial position, the property, plant and equipment, the property, plant and equipment in the statement of financial position were $230 million in 2016 and were $187 million in 2015. So how much has been capitalized during the year? Last year it was 187 million. This year it's 230 million. So how much has been the capitalization during the year? 43 million. Okay, so the capitalization is 43 million. And how much are the total assets of the company? What is the materiality of 43 million to the total assets? 11.7%. Okay, good. So how we get to know the 43 million? By taking the last year figure and this year figure. So what should I write? I should first start with materiality. The I should first start with my materiality, telling examiner the amount capitalized in the property, plant and equipment during the year, that is 43 million. The amount capitalized in property, plant and equipment during the year, that is 43 million, is how much was that percentage? Was 11.3%? Is 11.7%. Okay, it's 11.7%. Is 11.7% of the total assets, thus material to the financial statements. Now I come to my treatment. The expenditure on the modernization of the warehouses should be split between capital and revenue expenditure. The expenditure on the modernization of the warehouses should be split between capital and revenue expenditure, whereby the revenue expenditure incurred on the warehouses should be expensed out, whereas the capital expenditure only should be capitalized. So the risk is, if the revenue expenditure is capitalized, it could overstate the warehouses. It could overstate the warehouses being the non-current asset. It could overstate the warehouses and non-current assets and understate expenses. See, again, a case specific answer. I use the word warehouses, then I put the bracket non-current assets. So this was June 16 exams, right? Okay, then the June 17 exams. The capital expenditure of a 20 million. See, can you see the value again? $20 million. The capital expenditure of a $20 million has been recorded so far during the year. The group accounting policy is to recognize assets at a cost less depreciation. During the year, a review of the asset's estimated useful life concluded that many were too short. So the management concluded that the useful life of the assets were too short, and as a result, the projected depreciation charge for the year is $5 million less than the comparative figure. So does that mean that the management have increased the useful life? During the year, a review of the asset estimated useful life concluded that many were too short, and as a result, the projected depreciation for the year, that means the depreciation for this year, is $5 million less than the last year. The depreciation this year is $5 million less than the last year. So does that mean that the management have increased the useful life because they thought it was too short? If the management increase the useful life, will that reduce the depreciation charge? If the management increase the useful life, will that reduce the depreciation charge? Yes. So how should I start my answer? I should tell examiner first the capital expenditure of dollar 20 million is how much of the total assets? $20 million divided by the total assets, 358 million, 5.5%. Okay, is 5.5%. The capital expenditure of $20 million is 5.5% of the total assets, whereas whereas the whereas the less depreciation charge whereas the less depreciation charge of dollar 5 million over the last year is how much of the profit? The $5 million less depreciation over the last year is how much percent of the profit? It's 17.8% of the profit. Is 17.8% of the profit. I hope you are understanding one thing very clearly here, that we should divide the parameters correctly. Examiner says that the student divide every figure with every value, irrespective whether it is a balance sheet item or an income statement item. I divided the capital expenditure with the total assets, and I divided the depreciation expense with the profit. So you have to use the class very carefully, rather than you divide the $20 million capital expenditure with the profit before tax. Is very illogical. So examiner says you have to use the class of materiality very carefully. So the capital expenditure is 5.5%, whereas the less depreciation of $5 million over the last year is 17.8% of the profit, thus material to the financial statements. Okay. Now you come to the treatment. The management is allowed to change the management is allowed to change the accounting estimates. The change in the useful life is a change in accounting estimate, right? The management is allowed to change the accounting estimates for useful life. However, the change in estimate is very risky as the change in estimate could had been done to overstate the profit for the year. The management is allowed to change the accounting estimate, right? They can change the useful life. However, the change in estimate is very risky as the change in estimate could had been done by the company, could had been done to overstate the profit for the year. How much profit has been overstated just this year? By $5 million, right? Because the depreciation was charged less by 5 million. So the profits are overstated by $5 million. So the management is allowed to change. However, the change in estimate is very risky as the change in estimate could have been done to overstate the profit for the year by $5 million, which is already 17.8% of the profit. Right? So we utilize the 5 million, we utilize the 20 million. We appreciated that the management is allowed to change the accounting estimates, but wherever the accounting estimates are changed, they are very risky. They could have been done to overstate the profit for the year. Okay, the next one. Acquired brand names are held at cost and amortized and not amortized on the ground they have indefinite life. So the brands are not amortized, right? Why they are not amortized? Because they have an indefinite life, which is good, which is right. Annual impairment reviews are conducted, which is very good on all brand names. So we have to conduct an impairment review for indefinite lives. In December 16, the Chiku brand name was determined to be impaired by 30 million. Was impaired by 30 million. The value due to the allegation made in the press and by the customer that some ingredients used in the Chiku perfume range can cause a skin irritation and more serious health problems. The Chiku products have been withdrawn from sale. The Chiku products have been withdrawn from sale. So the very good thing the management did, they conducted the impairment. But see, there is a $30 million value, right? The impairment recognized the impairment loss of $30 million is a fill in the blank percentage of the profit. The impairment loss of $30 million is fill in the blank percentage of the profit before tax, thus material to the financial statements. The the brands with the brands with indefinite life should be annually reviewed for impairment. So you wrote the accounting treatment, which is very positive here. See, they've done the right accounting treatment. So the brands with indefinite life should be annually reviewed for impairment. However, even though the impairment was carried out, even though the impairment was carried out and a loss is recognized, there is a risk that if the recoverable amount was wrongly determined, it could had understated the impairment loss. See, we started with favor. The brand with indefinite life should be annually reviewed for impairment. That is the accounting treatment. However, even though the impairment was carried out and a loss is recognized, there is a risk that if the recoverable amount was wrongly determined, it could had understated the impairment loss. So what if the impairment loss is not 30, it's 35? What if the impairment loss is not 30, it's 40? And the management have understated the impairment loss. They have done impairment, which is very good, right? They have done impairment, which is very good, but they must have done something wrong in the recoverable amount. So I supported the accounting treatment. Now, after the full stop, see the last line. It says the Chiku products have been withdrawn from sale. Now, already with the MTR, you got your 2 marks here because you were attempting a question on risk. See, you have further marks. The Chiku products have been withdrawn from sale. There is there is a further risk that the inventory the inventory related to the Chiku brand is not properly written. It's not properly written down. There is a risk that the inventory related to the Chiku brand is not properly written down, as inventory has to be valued at the lower of cost or NRV. See, they have been withdrawn from sale, so technically they have a zero scrap value. There is a further risk that the inventory related to the Chiku brand is not properly written down or not properly written down to net realizable value, which is technically which is technically the scrap value, as the inventory could no longer be sold. There's a risk that the inventory related to Chiku brand is not properly written down to NRV, which is technically the scrap value, as inventory could not no longer be sold, and the inventory has to be valued at the lower of cost and NRV. You wrote the accounting treatment. Thus, the inventory could be overstated. Thus, the inventory could be overstated if wrongly valued. See, the last line helped you with another risk, and you got another 2 marks. See how important the Chiku case was. The Chiku case was not just impairment, but impairment was done. The risk was the recoverable amount, and the further risk with Chiku was that the product have been withdrawn from sale. So if they have been withdrawn from sale, that means the inventory technically have a scrap value, which should be lower than the cost, and they should be recorded at the cost or NRV lower. So I hope you're getting the sense of writing these accounting treatments. Okay, so has this exercise of some of the cases I did from June 17, June 16, December 15, December 14 have helped you to get to know how to write properly accounting treatments in P7? So was this exercise effective for all of you? Has this exercise benefited all of you? So will you implement it properly? Okay, now just one last thing. If I take you back to from where we started from this file, right, where I was giving you a guidance. So I'll share this guidance file with you, which I started at the beginning of the class. So we reached the point number 5. So let's continue and let's wrap up. The point number 6. If I just guide you for some journal risk associated, okay, let me show you something first very important here. What are the most repetitive accounting standards? IS 36, you should be very good on that. 37, you should be very good on that. 38, you should be very good on that. I've given you the reference of the accounting article by the examiner. And it's very difficult finding an exam sitting without 36 and 38. So you have to be very good on 36 and 38. These are three very important standards, very important standards. IFRS 2 is very important. IS 21 is very important. IFRS 5 is very repetitive. IFRS 15 is very repetitive. IFRS 7 and 9 is very repetitive. So please be good on these repetitive standards. Please be good on these repetitive standards. See, you can do something. If you can do something like this back at home. Suppose if you can make a table like such at home after the end of the session today, you can make a table like such at home. The exercise I did with you in terms of the scope, you can make a table like this, a 3-column table, rather a 4-column table like this. And you can think in a 4-column table, the accounting standard, does it deal with recognition or does it deal with disclosure? And what's the risk of material misstatement? For example, you start with IS 10 and you say, okay, IS 10 deals with disclosure. Yes, IS 10 deals with the recognition of adjusting events. And the disclosure of the non-adjusting events. And what's the risk? That the non-adjusting event, the non-adjusting event is not disclosed, etc. You have to make it yourself, right? Just want to show you the way. Then you say IS 12. IS 12 is all about the recognition of a DTA, deferred tax asset, and is all about the recognition of a DTL. There is no disclosures, right? A big cross. Risk of material misstatement, deferred tax liability not recognized, and deferred tax asset not recognized. Then you say IS 16. The very important thing in IS 16 is the recognition of the capital versus revenue expenditure. Capital versus revenue expenditure. And another very important recognition is the revaluation. Again, no specific disclosures as such. You can find and write them in the column. But the risk of material misstatement is the revenue treated as capital expenditure, and or it could be that the the incremental depreciation the incremental depreciation arising from revaluation the incremental depreciation arising from revaluation was not recognized, because obviously when the assets are revalued, your depreciation charge increases, right? The incremental depreciation arising from revaluation was not recognized, thus the expense could be understated. Or if no deferred tax liability is recognized, if no deferred tax liability is recognized because of the revaluation, then the deferred tax liability could be understated. So if you can make such thing back at home, when you're revising a standard, make 4 columns, put the name of the standard, put whether it is about recognition or about disclosure, and what's the risk. For example, you go to IS 24. So IS 24 has nothing to do with recognition. It's all about disclosures, disclosures of the related party. So what's the risk? The risk is disclosures are not made. So I hope you can make a table like such of all the standards I've given you above in the worksheet. I have given you the boundaries of every standard, right? So within every standard, you have to see whether it deals with recognition. See, either a standard deals with recognition or it deals with disclosure, right? There is no third thing. For example, IFRS 8. IFRS 8 deals with not recognition, rather disclosure. Disclosure of the operating segments. Disclosure of the major operating segments. So what's the risk? The risk is if disclosure not given, then the financial statements could be materially misstated. So can you continue with this exercise? Will that sum up things for you? I think this table is a very effective way of preparing yourself for 4th June. If you want to revise things, this is a very good way of revision. If you can just make a paper in front of you and make 4 columns on a paper, and when you sit down to study on a daily basis for P7, at least ensure that on a daily basis you do something like 4 to 5 accounting standards. And on a daily basis, if you do 4 to 5 accounting standards, that's good enough. And for every accounting standard, fill in the columns. So make a target that on a daily basis from now onwards, or rather from tomorrow, Thursday, you have to revise 5 accounting standards. So if you revise 5 accounting standards in the next 5 days, I think the list will be completed. So is it difficult to revise 5 accounting standards in a day? So is such a table benefit you? Will such a table benefit you? So can you make a table with recognition, disclosure, and risk? And I hope you can make your own summaries now, because you know how much to write now. You know how much to write now, so you can make your own summaries. Right now, obviously, the session you have with Sir Hussain Kazi, he will be guiding you on the group accounting standards, and he will be giving you the summaries of the group standards, particularly associates, non-controlling interest, intercompany transactions, summaries of the goodwill, summaries of the joint ventures. So you will get to know some clarification of the group standards. That will be an extra revision. Plus IFRS 16 leases. If anyone is weak on IFRS 16, you get to know the IFRS 16, and also you get to know IS 12 and IS 19, the employee benefits. So there are some more standards coming up into the session on Friday, which will benefit you in terms of your knowledge. My session was focused on drafting, right? Sir Hussain Kazi's session is not drafting, but he will just tell you the concepts. So once you know the concepts, you can link them to P7. So my session was practice. His session is concepts on the main accounting standards. And I believe IFRS 16 is important for June 18 exam. So I purposely added that in the list of Sir Hussain Kazi. And I did added IS 12 and IES IFRS 9. So that the standards added to the list of Sir Hussain Kazi class are more or less probable for June 18 exams, right? So that was the reason of adding them to that session purposely. Okay, now you have any questions pertaining to the session today? It's now your turn. Anything you would like to ask? You have a 15 minutes question answer session. Anything you would like to ask? Keep your questions concise to like one and a half line. Any questions? Sunita, you can type IFRS box in the Google search bar, IFRS box, and you will get the website of IFRS box. Simply search it on Google. Muhammad Anwar, I have answered your question, right? Uh, and Raza Zedi, I have answered your question as well. I hope you're clear with that answer. And Augustine, I have answered your question as well. Muhammad Afzal, your question has been answered as well. Uh, Okay, then in the meantime, please fill in this questionnaire in front of you, a poll in front of you, which will help me effectively analyze the effectiveness of the session today. Because in the meantime, I am considering your questions, because most of the students are thinking they will raise questions after the end of the session. Most of you have responded with that you will like to ask questions, but later. So that's fine. Obviously, I am available on the WhatsApp group. But currently, the state of my WhatsApp group is so overflooded with students from webinar, June webinar, March webinar, with students from a regular class, students from my crash courses, students from within Pakistan and out of Pakistan. There is a flood of messages on my WhatsApp. So even if there is a delay, please be patient on that delay, because it's loads and loads of messages which are coming every day for P7. No issues at all, Augustine. If I can help you in some regards, that's fine enough. Noshat, see the answer I just posted for your question. Are you clear with that answer now? Okay, that's great. Yes, the recording of the session today, along with the word file I used in the session today, the two word files that will be put on the WhatsApp group. But you have to give me some time because the I can do it after the break of the fast because it's currently over the next 2 to 3 hours I'll be busy with the Ramzan routines. So probably by 10, 11 p.m. in the night today, I'll be able to respond to the recording as well as the Word file. Okay, I think then that is it for the session today. I wish you best of luck. I hope what you have learned in the session today, you will effectively implement that in your exams on 4th of June. I have high hopes from all of you, whether you are my regular students, my webinar students, my crash students from any part of the world. I wish you best of luck for your exams on 4th of June, and I wish you success in your exams in June 2018. I hope whatever you have learned from me, you will effectively implement that and you will ensure that you're not doing any mistakes, any blunders. You still have time, you still have like 10, 11 days to implement the learnings and be confident about your exams coming on the 4th of June. Okay, that is it. Uh, it's goodbye from me. Allah Hafiz. Have a nice day and hope you come out good with exams on the 4th of June.